specific liabilities that exist on our balance sheet. All of us know we have the accounts payable, which is generally somebody who's we are selling goods or services on credit. We are taking supplies on credit, normal operating cycle activities, and this guy is not giving us a promissory note. It is an oral promise to pay, generally current in nature. Then we have accrued expenses, something like outstanding salaries, all the outstanding utilities, all of those that we have already availed of, but we have not paid for them by the end of the year. Then we have these deferred revenue. The best example is, guys, best example for unearned revenue. Quick, now I want you guys to get these really fast, okay, because we have done this earlier. Example of an unearned revenue, fast. Hey guys, if you're so late now, I don't have a obligation to do these in the class. If you're late, I will leave it and I will go ahead. Give me an example of an unearned revenue. I'm not taking this then. I'll leave it. You want me to do that? Think. One example of an unearned revenue. Hey, what's wrong, guys? Advance payments. What do you mean by advance payments, Sharon? Yeah, advance payments, but what? I want an example. I know. Advance payments received for what? You're giving me the definition, guys. I want an example. Sales. Sales cannot be unearned revenue. Very good. Advance for services, right? Yeah. Rent received, yes, pre-received rent, all the pre-received, advance for services, advance for subscriptions, all of that will be unearned revenue, right? Then you have all of these taxes payable, right? Which is typically your employees related taxes, maybe sales taxes, maybe property taxes. How are you going to account for that? And then in the end, we have these other employee related liabilities. So typically we're going to talk about something like a compensated expenses, right? All of those vacation pays that you can have, or probably the extra bonus that is due to the employees. All of these will be doing. All of these are part of current liabilities sections, guys. Okay, these are mostly current liabilities. Okay. Okay. The first one. What is an accounts payable? We all know this. It's a normal general trades payable, and these are non-interest bearing because this is not a written promissory note. Another thing is these are not secured. A trade creditor is not a secured creditor. He has no options. He has no collateral that is attached. Okay. Now see, we have done a similar sums from the debtor's perspective when we were doing accounts receivable. This is the same kind, but we're talking now from the person on whose book the payment has to happen. That means I have purchased some services for which I have not paid. The other party is reflected in my books as an accounts payable, and now I have to pay him. Okay, so what is happening? A purchases, one second. A purchases $500 of inventory on terms 2/10, net 45 days near the end of year 1. That means I have purchased an inventory. That means it's a normal trade purchase. And I've been told that if I pay it within the next 10 days, I will get a 2% discount. Otherwise, I'll have to make the payment within the next 45 days. The entity accounts for discounts using the gross method. Gross method. You remember we did the gross and the net method? Pass the journal entries. Okay, so what's the first journal entry? Chat panel, guys. Now this you should be knowing because we've already done it once from the debtor's perspective. Now we are doing it from the creditor's perspective. What's the first entry, guys? Okay, most of these cases, I don't want you to book purchases because that is not what companies generally do. They book inventory, right? So what we will do, we will book inventory and we will credit the accounts payable. So this is the creditor in my books. How much? 500. Why? Because this is a gross method that we are going to follow. So we'll book it with 500. Okay, Aishwarya, you were not there in the classes when we had done this probably. So, it's like you're doing that part here. Then the next entry is going to be what? Now you're going to pay. assuming payment after the year, but before the expiry of the discount period. That means now I am going to avail of the discount. So what is happening? I am paying the other party, so my liability is going away. I am availing the discount, so this becomes discount received, and I am paying them in cash. So I am removing full 500 from my books. 2%, this will become 10, and this will become 490. Is this clear? So this is the gross method. You could have also done it with the net method, in which case you will book the inventory only at 490, and in this case you have paid it in at 490, so shouldn't be a problem. Is this clear? Now look at the second example, second thing, which is accrued expenses. What is an accrued expense? Something like a salary or a utility. 31st December has come, you haven't paid it, but the services have, the expense has already been incurred. So what is the question? An employee works 5 days during the last week of the year and earns $1,250 per week. 3 of the days fall in fiscal year 1 and 2 of the days fall in fiscal year 2. Prepare the journal entry to record the liability and then the payment when it happens in year 2. I want you guys to give me the journal entry. So what is happening? 31st of December, 3 days have passed. I'm not supposed to pay this guy today. I'm supposed to wait for another 2 days and then pay this guy. So 31st of December, what entry will I pass? Yes, guys? Chat panel, fast. On 31st of December, year 1, what entry will I pass in my books? Yes, guys? 1250 is for the full week. So 1250 divided by 7 into 3 is the amount of work that has already been done pertaining to year 1. And the balance will be for the next year. Okay? What's the journal entry, guys? Salary, very good. To expense. No. No. Rahul, check the right terminology. Salary to payable, that's correct. Rahul, why will you call it outstanding salaries? You're going to call it an expense account debit, right? See? Oh, that's a mistake. What is the figure? 1250 by 7 into 3. Oh, sorry, by 5, guys. Sorry. My bad. It's for 5 days in the week. Yeah, 750, yes. Okay, many of you, please be clear. The P&L has to hit, okay? So it is salary expense account debit. And then you will credit the payable, the outstanding salary or the payable, salaries payable, whatever you want to call it. Salaries payable account. How much? Only 750. Joseph, is this clear? You can't hit it with 1250 because that is not your expense for this year. So this is 750, this is 500. So next year, on whatever day you are doing it, year 2, when the payment is made. What is the entry when the payment is made, guys? Now you're not. So this is a P&L hit. Do you realize this? This is a P&L hit. In the balance sheet, you're going to call it as a current liability. And then next year, the only reason why we are doing this is to abide by the matching principle. The work has been done this year, so you can't hit the P&L any year after this year. So next year, what is the journal entry that will be passed? Give me the full journal entry, okay? Yeah. Next year, when you pay, what will be the journal entry? Full entry, guys. I'm waiting for the answer in the chat panel. Full entry in the next year. Yes. So what you're doing? You will first reverse the salary payable, which was pertaining to last year, but this will not move out of P&L. This will move out of your balance sheet. 750. This year, you will have the salary expense. This is going to hit your P&L this year. which is 500, and then you're going to credit cash because this is the final amount that you're going to pay to the employee this year. Is this clear? So this is current liability going down. This is your P&L expense going up. And this is the cash which is going up. Is this clear? Joseph, is this clear? Third is a scenario when you're having an unearned revenue. Now this we have already done when we did revenue recognition. Okay. So what we're saying is we have received the cash, but we have not performed our part of the work. So the idea is if I have not performed my part of the work, then anytime if something happens to me, I am obligated to return the money to everybody who has paid it to me. So I can't call it as an income. I have to book it as a liability in my balance sheet. And when do I book a revenue from it? When the part of my performance obligation has been done. That is the time when I'm going to book revenue after this. Okay, now this is a challenge question because everybody here has done revenue recognition. Okay, now I want one answer and let me see who gives the correct answer the first. Okay, N company requires advance payments with special orders for machinery constructed to customer specifications. These advances are non-refundable. Information for year 2 is as follows. They have given you that the customer advance balance as on 31st of December year 1 is 236. Received advances with orders in year 2. Advances are applied to orders which are shipped in year 2 and the advances are applicable to orders which are cancelled in year 2. Please give me the ending balance of the advance account on 31st of December. One answer. Let me see who answers this correctly. Yes. One answer. Yes. We have already done revenue recognition. So this very good, Vishnu. Very, very good. What about the others? It's easy, guys. See, you just have to make the T account, isn't it? Sorry. You just have to make, yes, very good, Sharat. You just have to make the T account. This is the pre-received or the deferred revenue or the contract liability, whatever you call it, right? So let's say it's the advance received. So this is a part of, this is a current liability, right? Because you received this money and this is not being applied towards the performance obligation. So what are you going to do? It has a current balance, which has to be a credit balance of how much? 2,36,000. Out of 2,36,000, you further received it. So you would have written cash to advance received. Now see, by this time, I want you to start constructing the T accounts on your own. So what you did, you put in another $3,68,000. We did this. Then advances applied. Now you have performed this part of the work. So what is the journal entry, guys? What is the journal entry? Now you will debit the advance and you will credit the revenue. So the revenue must have been credited. How much? $3,28,000. Advances applicable to orders which are cancelled. But they have told me that these advances are non-refundable. So even if the orders are cancelled, what will I do? I will now book it revenue. Because now for me, this has flowed from my balance sheet to the P&L. How much? $100,000. So whatever is the balance brought down, carried down, which is a plug figure, that will be the balance of the current liability as of the year, which is $1,76,000. So next year, you're going to carry this down in your books. Is this clear? By this time, I want you guys to be able to answer these questions, okay? Because as I told you, I could have easily left this portion. But I just want to wrap it up here so that you now understand you're dealing with the current liability section. So everybody got this correct, right? It's a good thing. Thank you. Okay. Now see, now we're going to talk about the payable part of the taxes. Now, the first part obviously is the payroll related taxes. Now this also we know, right? Some of the taxes in the US, which are related to payroll, is, one is the unemployment taxes that every employer has to pay. And the second is the amount which is corresponding to the PF that we have in India, right? So what we do, we have a salary, then employee puts in his share, the employer puts in a corresponding share, and both the amounts go and get rested in the employee's provident fund account. And after X number of years, or before, or when you leave the company, that amount gets transferred. Same thing happens in the US. We call it FICA taxes. Now, when you do regulation, you will do this in greater details. But as of now, I just want you to understand one concept. And in the US, it is something like this: 7.65% of the salary you put in, 7.65% of the salary your employer puts in, and totally some 15 point something, 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 3 is a total percentage that goes and gets deposited in the FICA, the federal the company. It's similar to the savings that we have it in India. Unemployment tax is generally paid only by the employer. Okay, so that again, so can you understand, this has the employee share and this has the employer share, and this is the employer's shares. Okay, so when you do regulation, they will teach you that you have a limit. So if your wages are up to a particular limit, then only that amount will be applicable. So if, let's say, your wages are more than that, then the excess, you will not apply the percentage of FICA. Now, see, in your exams for FAR, they will not ask you these. They will just give you the figures and expect you to roll out the journal entries. That's it. So understand that there's an employee share that you're deducting, and there is your share that you also have to put in. What will be the journal entry related to it? Exactly the same as we have it in India, but I just want you to know the terminology. So unemployment tax, which the employer has to pay, the and the FICA taxes, which is like PF in India, half paid by the employer and half paid by the employee from his share. Okay. Look at the question. Okay, the best way to do these questions are through examples, guys. Okay. See, ABC company's payroll information for the month ended on January 31st was as follows. Total wages paid at the end of the month was $100,000. Federal income tax withheld. So from the employees, his share of income tax, this is not FICA, right? This is the income tax. Because, like, this TDS, tax deducted at source, $12,000. And then there's a FICA tax, which the employer will pay and the employee will pay 7% each. And then there's an unemployment tax that only the employer will pay, which is 1%. Assume all wages paid were subject to FICA and unemployment tax was subject. So all of the wages are subjected to it. So there is no limit that they have mentioned. If you mention your limit, then you have to apply those limits. You're supposed to pass necessary journal entries in the books of the company on Jan 31st. Okay. Now see, what we will do is we will break it under two heads. The first will be what you're going to pay to the employee. And the second will be the extra expense that you will incur on account of FICA and FUTA. Okay. So the first entry must be really simple. What will be the first entry, guys? Forget about these taxes from the employer's share. Just give me the journal entry that the employee will pass while paying the money to the employee. The employer will pass while paying the money to the employee. What will be the entry, guys? Wages account will be debited. How much? $100,000. Okay. What will be credited? No, Vishnu. You cannot pay 100 full, right? You will have to deduct his taxes. You will have to deduct his part of the FICA. Then only you can pay him, isn't it? The PF share that we have for the employee, that has to be deducted. And the employee's taxes that you have to deduct at source, that has to be deducted. And the balance will have to be paid, isn't it? Are you understanding? So this is taxes withheld or withholding taxes, whatever you call it. Which is a part of what? Which is a part of a current liability, isn't it? Because this is not you just have to give, you are a liaison. You will collect it from the employee and pay it to the government because that duty has been imposed on you, but it is not your P&L hit at all. Can you understand this? So what will happen? So this is only for federal income tax, okay, of the employee. How much? $12,000. Then it will be FICA, but it will be employee's share. His share you will have to deduct, right? How much? So basically out of this 7%, the employee's share will be 7% of $100,000, which is 7,000. And the employer's share will also be 7,000. Total 14,000 will go and get deposited in the FICA account of the employee. So what will happen? You will deduct 7,000 here for his share. And then the balance will be paid to him in cash or her in cash, which is somewhere around 81,000. Is this clear? Everybody? No. What about his share? Sharad, can you understand? What about his share of the PF that you're deducting, the FICA equivalent in India? What about that? Now, this is not enough because the employer will have a further P&L hit because he has to pay the unemployment tax and he has to pay the FICA tax, right? Or she has to pay them. So what will be the entry? Now the employer will hit the payroll expense account. With how much? With FICA taxes of the employer. How much? $7,000. And there will be a FIUTA tax which will be paid. So basically it is taxes payable, guys. Okay, this is FICA payable. To FIUTA taxes paid. How much? It is 1% of $100,000, which is 1,000. So the total 8,000 is going to go and hit your P&L. So quick, guys, what is the total payroll expense for the employer this year for this employee? See, it is this plus this. $108,000. This is the P&L hit. Do you realize this? This is your current liability. This is your current liability. And when you pay it, you simply debit it and credit cash. Is this clear? Is it clear, guys? Everybody, is this clear? Again, the same thing. You're conducting state sales taxes. So in the US, most states have a state sales taxes. Okay. In the US, most states have a state sales tax. What they will do? They will, so basically you are acting as a license or an intermediary. You will collect the tax from the customers and then you will pay it to the government. Why? Because the collecting authority or the collecting responsibility has fallen on you. Just like the GST in India, guys, right? Now this must be clear to most of you. Just give me the journal entry, guys, okay? See, XYZ company sold a jacket for $1,000. All sales are subject to 8% state sales tax. Please pass the required J. What's the J, guys, for this? I'm not writing it till I get the answer from you. Yes? What's the J? This must be, this I'm really expecting you guys to know, guys, okay? I have an MRP of $1,000. I have to collect sales taxes and I have to pay it to the government. Accounts receivable, sales taxes, sales tax payable. Now see, okay, Sharad. Vishnu, accounts receivable, sales tax. Sharad, do you realize where you're making a mistake? Think, how much are you collecting? How much are you collecting? Share. Employer's share. My goodness, guys. What's wrong? Okay, first of all, you have to understand that the customer, you have some additional liability, right? How can you deduct your sales taxes? Yes or no? What is the customer going to pay you? You're going to give him a bill. Sale 1,000 plus 8% GST or 8% state sales tax, 80. You pay me 1,080, isn't it? This is what you get from the customer. So it's accounts receivable or cash. How much? 1,080. Out of which your revenue is how much? Your revenue is only 1,000. And to sales taxes payable. This is the amount that you receive, but it is not your baby. You're just going to give it to somebody else. So this is going to hit your current liability by 80. And then when you pay this liability, then the sales taxes payable, that liability that you had incurred, that will be reduced. And you have to pay them in cash. How many people understood this? This is basics, guys. Okay, if this is going wrong, okay, then you have, yeah, Rahul was correct. But I wanted the figures. Is this clear? Everybody, whoever got this wrong, go and please check your basics. Okay, because if the basics are not clear, somewhere or the other, it is going to show up in the exams. Okay, understand what is seen. So long as it remains a sum on a sheet of paper, you are never going to understand this. What you have to do is you have to bring it to yourself. Look at an example. When you go and buy certain things, what is a bill that comes to you? It's never a minus. It's always a plus. It's not a discount. It's not a benefit that you're getting, right? It's an extra payment. Is this clear? Now, this is a good question. Okay. Property taxes. Okay. What is a property tax? What is the peculiarity about a property tax, guys? Can anybody tell me? It's same everywhere with all the governments. What is the peculiarity? Tell me. What is the most peculiar thing about property taxes? What is the most peculiar thing? See, the tax bills that you receive definitely not link with the year in which you're receiving it. Because the government has its own way. The government will give you the property tax receipts on its own date, which may or may not coincide with your closing dates. Is it clear? For the government, it is 1 day tax incidence. But for you, the question is, what do you do? Do you accrue it? Or do you treat it like when I get the bill, that day I'm going to give record the liability in my books? See, have you understanding what I'm saying? So property tax, receipt, the municipal taxes that we pay in India for the properties that we have is similar to that in the US. So can you understand that you cannot accrue for it? It's not like an electricity bill. When the property taxes are levied, that may or may not tally with what was there. So what we have for reference is a bill that was raised to us last year, because this is the government's baby, right? So the government will just cut a challan and tell me, this is your current year's municipal tax bill, which may or may not be similar to what happened last year. You've increased it a bit. So the only reference that I have is last year's bill. I look at the last year's bill. I do have an option, but generally most businesses do what? They accrue for that on some reasonable basis throughout the year. And then when they accrue, there's a liability that you're building and you're debiting your P&L expense. And then when you receive the bill, you simply knock off that liability. If there's an extra amount, you book it as a further payable gain or a loss, and then you debit out, then you credit the cash. The best way to do it is via an example. And these examples are tricky. Okay, so I'm giving you an example. Even the sums that you're going to see in your database are going to be a little tricky in this area. So apply that common sense and then do the question. See, what are property taxes? These are usually expensed by monthly accrual over the fiscal period of the taxing authority. That means I generally do not want to leave it like when you give me the bill, then only I'm going to accrue the liability, because generally it is a payment related to the passage of time. So I'm going to accrue it. Accruals are based on what? The estimated annual amount until the actual tax becomes due. Once your actual tax becomes due, that is the time when you're going to knock off that liability in your books. Okay, look at the question. See, B County's fiscal year is August 1 to July 31st. And A Corp has a calendar year end. So the year ends might also not tally. The government can have a different fiscal year and you're going to follow the calendar year. The county's tax bill for the prior year is received in December of each year. So the full year has gone by and I'm going to receive the bill in December. Now, in December year 1, A Corp receives a property tax bill for $12,000, and in December year 2, the bill is $12,700. Each quarter, A Corp accrues 1/4 of the prior year property taxes as an estimate for next year's tax. Is this making sense, guys? See, today's session, I cannot teach you anything. We are just discussing certain common stuff that is available, and you have to apply your common sense to basically just construct the journal entries. There is nothing to teach you. We are just exposing you to various possibilities. But how do you solve it? It's just by application of common sense. We are not going to, I cannot build this up. And if you are faltering here, you have to just work out more questions in this area to understand it better. Okay? So what is happening? They're asking you calculate the accruals. Now, first year we are clueless, right? So first year we're not asking you to make the bills, make the entries. For year 2 and year 3, I want you to make the required journal entries. And in year 2, when you receive that bill for 12,700, on that day I want you to pass the journal entry. Okay. First question, guys. What is the accrual that I will make in year 2? All the quarters. Can anybody tell me quickly? Chat panel. What is the accrual that I will have in year 2? The accrual that I'm going to have in year 2. Okay, so let me just construct something like accrual. You're going to accrue it quarterly, right? Sharad, Vishnu? See, 3,000 per quarter. Okay, let me construct something like this. Okay, so this is year 2 and this is year 3. Why 6K, Aishwarya? Why 6K, Joseph? No, it will be full. See, you are accruing it from Jan. It's your calendar year, right? So your calendar year is going to be from Jan to December. So whatever bills you received last year, you received 12,000 for the entire year, right? When the government is giving you bill, the government is not giving you half a year's bill. The government, you see what they're saying. The county's tax bill for the prior year is received in December of each year. So whatever the entire year. So when the county is giving you a bill, Joseph and Aishwarya, when the county is giving you a bill, they're not giving you 6 months bill from July to December. First of all, this is 31st of July, okay? They're not giving you for the 5 months or the 7 months period. They're giving you for the full year. Are you understanding this?
Okay.
So when you accrue, you will accrue it. So this 12,000 is for the full year bill. Is this clear? On the basis of the bill that you received in the first year, you are going to make an assessment for the next year. So what you're going to think, okay, last year was 12, this year will also be 12. So what will I do? Every quarter, I'm going to accrue. So my first quarter will end in March, June, September, December. Again, year 3 will be March, June, September, and December. And somewhere in between, you receive the actual bill. So here, you receive the actual bill also. Is this clear? What is the journal entry you guys will be passing for the first 4 months? So this is the actual bill received. So first question is, what will be the journal entry that you will be passing for the, so every quarter, what is the journal entry that you'll be passing? Yes, guys, what will be the journal entry? Quarter. I want see, the questions are going to be very, very specific in this area. And I'm not saying that you don't know the concept, but you might incorrectly mention the figures. So Rahul, as I was telling you in the last example, I want the figures. In every journal entry, I want the figures. That is where you make silly mistakes. Okay. So what is the course? So question is very clear. What will be the quarterly journal entry I'll be passing in year 2? Yes, guys, give me the journal entry. Excellent. Sharad, do you see? Now you're getting it. Yes, a P&L has to be hit. So your property tax expense, I'm going to hit, and I'm going to credit the payable, right? Property tax payable. This is a current liability. How much? 3,000 every quarter. Is this clear to everybody now? So I'm accrued. So can you see at the end of it, my balance sheet is going to show you a current liability of $12,000. Okay. Now you tell me, what is the entry I will be passing when I receive the bill from the authority. Now that bill is for 12,700. Do you understand this? The entire year, I have passed entries for 12,000. Now that bill has come for 12,700 in the month of December. So what is the journal entry that I'll be passing here, guys? 3/4. Okay, you're thinking too much, Vishnu. See. What did you do? Okay. Okay. It is a very smart answer, actually. But see, ideally, what they're telling you is that you're accruing it on the. Okay. You have a very, actually, you really, I give you to this. This is a good entry. But see, in your books, most of the time, when you receive it, the concept is going to be that you accrue for all the 4 quarters and then you pass the final entry in your books. So the last quarter accrual has already happened. Okay, assume that the last quarter accrual has already happened, and after that you receive the bill. Then what is the journal entry that you'll be passing? So the property taxes payable will go away from your books at 12K. There will be a further property tax expense that will hit your accounts for 0.7. Okay, let me just not be lazy here. And cash tax payable, yes. And so this will be 700. This will be 12,000. And then there will be a cash of 12,700. Is this clear? But yeah, Vishnu, in real life, if you get the bill before you make the provision, the entry that you gave was perfect. Okay. But look for that in the question. If that question does not tell you this specifically, then you will not assume it. See, in December year 1, receives a property tax bill, and in December year 2, the bill is 12,700. Each quarter, 1/4 of the prior year property taxes are used as an estimate for next year. So they're not telling you that last quarter's bill is satisfied. So what you've written is actually correct, but in your exams, be mindful. Joseph, write your question in the chat panel, please. Okay. And in year 3, the journal entry that you'll be passing is again the same. You will be passing it for what? Now it will be for 12,700 divided by 4, which is how much? 3,175. So the same entry, but it will be for 3,175 in year 3. Have you understood this? All the 4 quarters. This is the entry for all the 4 quarters. Joseph, unmute. What do you mean by saying, can I pass a separate entry only for differential? What do you mean by that?
What I'm saying is, I've already passed an entry in my books for 12,000. I got the actual bill, which is 12,700. So I pass an entry only for the 700 and then pay 12,700 by debiting the payable. Yeah,
but it is the same thing. Na? Instead of making a clubbed entry, you are first paying PT expense to cash. But see, cash, when you will be paying, it will be one entry. What you're saying is the same thing.
My point is, already there is an entry passed for the property tax. Now that I've got, I'm only paying the differential.
That is what you're doing. No, but why will you pay the differential? The payment will happen only when the bill will be coming to you, which is only for 12,700.
I'm making the provision now for the 700, the difference. I don't know. That's what it is. Is that the right accounting?
You have no. You are now getting the final bill, Joseph. When you get the final bill, you have to pay the final bill, right? But this amount is not provision.
Okay.
See, this was a provision that you did. Now that provision has given you the final figure. So this was an estimate. Now that estimate is giving you a final figure. So you will have to accrue. This is not a fine. This is not again an accrual. This is a settlement of something that you've accrued over the last 1 year. Have you understood?
Okay, got it.
We are doing the same thing. Okay, but your approach is slightly different, which is not correct. But if you look at it, I have accrued over 1 year and now I just have to settle it. So this is the final delta that I've got. Is it clear?
Yeah. Got it.
Okay. Sudhir, you're there? Are you able to catch up with the journal entries? Because by this time, I want you to start working on this. Okay. See, it is not going to get harder than this. If you're able to understand this in these areas, the questions are tricky because the concepts are very simple. So if the questions are tricky, the only way you can master this is by practicing. So do the MCQs very well and very mindfully in these areas. Vishnu, uh, okay, one suggestion I'll give you is that you have a lot of practical experience, which is evident by your answers, but don't think too much between the lines. What is given to you, you will have to unlearn and get back to a student stage when you're answering the questions. Because unfortunately, no single person is checking. It's an exam, it's a computer which is checking, right? So if there, even if you know, you will find it very strange, but you'll find it at many places, instead of clubbing it, if the answer is all unclubbed, it will give you all red marks in the simulation. So I want you to do your simulations really well, because there you will start understanding what you are presupposing. Is that clear? So be careful about the simulations. Okay.